Hello everyone and welcome to today's major markets update. Is trouble brewing for the markets? Was it just a bounce or are we still going to attain our higher targets for a more clear or impulse wave? Let's see what we have, and let's start off with the ugly duck and the weakling in the market, and that is the semiconductors. I preferred the view that we had one and wave two potential already completed on Tuesday, then 3, 4, and 5. Well, that absolutely did not happen. And we are now at the 76.4% retrace. That's quite a steep retrace for a potential wave two. If this doesn't hold, then odds really start to favor that all we had for the semiconductors is a bounce. I repeat, a bounce. Then this might have been a very complex A, B, C type of wave 4, and I can label this as wave 4. Okay, then we simply have to move the mark to the right in time and a little bit to the downside in price to finally, ideally, hopefully, maybe, so to say, reach these missed target zones. These missed target zones here at around 2850 plus or minus 100 remain on the table. This doesn't mean the other indexes have to do the same. Remember, most indexes have been misaligned for many, many months in a row, if not for the whole last year. Compare the Dow Jones, the Russell 2000, that pretty much did nothing last year compared to the S&P 500 and the technology sector, which were pretty much the only ones rallying. And of course, the semiconductors a bit. But if you would overlay the technology sector on the same chart, it was one big rally. And as you can see here, this was rally, drop, rally, drop, rally, drop. Quite the confusing market. And it remains confusing. Nothing remains easy. So this could easily have been, this was also a ugly decline, a wave, a B wave, and now finally in wave C of, which would then actually be a wave 5 or 5 or 5C or 4 to this target zone. So please keep that in mind. This is why we need to have stops in place. This is why we don't anticipate. This is why you say, you know what, if I'm in a losing trade, I'm going to cut my losses. That's just the way it goes. You rally it to the upside, you go long, and then eventually you turn it into cash. You always do. Do not sit here and say, oh, it's going to go there anyway to 5. It must. No, this is an interpretation of the price action. We bottomed on Wednesday right where we should, around 50% retrace, rallied for a day, and fell completely out of bed. Don't ask me why. The drop here is, of course, much more pronounced than all the other indexes. That's not what matters. What matters here is that semiconductors are in trouble. That's for sure. Another bit of a troubling market is the IWM. The IWM is in this blue box, and I have question marks here because I have a hard time interpreting the price action. It might be similar to the semiconductors. This is all overlapping. We had some clear impulses higher initially, which can be 1-2, 1-2 type of setups, but I need to see breakouts. This is quite a confusing mess. And again, I'm going to be honest, I don't know yet how to interpret this truly. So to say, I don't know exactly what's what. We have 5 up, 3 down, 5 up, 3 down. So it can be a 1-2, 1-2 setup, can also be ABC. ABC to be determined. I don't like the fact that we have not reached of these ideal 3, 4, and 5 target zones. So also this index is on watch. And that's what happens. Again, I don't have all the answers. I try to interpret this as correctly as possible. This worked really well here, the low in late February, and the rally and retrace was okay, 5, 3, 5, maybe 3 to be determined. Again, this can turn into a ending or leading diagonal. Don't be surprised. So that is a problem with leading diagonals. They're quite messy. So this is a question mark in the sense that with leading diagonals, they're a little hard to interpret because of the overlapping price action. It is a bit confusing where wave 1 and wave 4 overlap and all that bad stuff. So please keep that in mind. And this is then A, this is then B. We kind of have a similar type of wave 4 as a wave 2 there. See this? This is all kind of the same. So it's a little wishy-washy. So this is my most bullish option, I would say, for the IWM. that we're in some sort of leading diagonal pattern. Let me see how long wave 3 was. Wave 3 was 123.6. So then maybe wave 5 is going to go here. This would then be wave 5, and then this would be wave 1. It wouldn't surprise me if this is the case. It wouldn't surprise me there. And I'm going to make this a little more green there and there. So please be patient. So this is then wave 1 and 2, equal in length pretty much as 3 and 4, with 3 being 123.6 right there. That's 123.6, which is quite common. It doesn't have to be this way because leading diagonals don't have to have much rhyme or reason, so to say. Okay, this is then wave 3 at 123.6% extension. Okay, very possible, which should be at about, let's see here. Let's do the math, shall we? Right there, 212.25. Okay, 212.25. And now we're going to check if that is being reached. Okay, so 112.25, boom. I'm going to still do the question mark though for is this a leading diagonal? Okay, don't know yet, very possible. Would be the first one we've seen in a long time. Okay, so I'm going to add the copyright box here. Making sure everything is on the chart. And I'm sorry I didn't do this before, but my workload is beyond anything currently because everybody's doing chicken littles. There we go. So we're trying to elucidate if this is a leading diagonal. Okay, so far we reached 123.6. I like it, not too bad. Okay, so let's see if we can save this on the chart. Thank you very much. Let's see if we can get to the 123.6% extension. Go back, 212.25, and we got 212.25. It is absolute bingo, and bingo is my name. So now we need to hold this. Okay, then we get wave 5 to about 161.8, potential 138.2. And then we have 5 waves up. So please give us that, make my life easy, market, because it's not been easy so far. To be determined, this is the bullish count. If not, this is a sideways wave 4 mess. All right, that brings me to the S&P 500. Okay, the S&P 500 has so far bottomed in the ideal typical wave 4 target zone. Remember, and I'll show it here, this was on April 1st. On April 1st, the update, I said a typical wave 4 retrace target zone is shown here and in green. And I expect wave 4 to become a bit more complicated, a multi-day correction. So I placed the A, the B, the C. So this was on Friday, A, B, C. Okay, that was that chart. And on Friday, I also shared this wave count. A typical 4th wave retrace target zone is now reached, of course, could become a multi-day affair, A, B, C. So far, so good. Okay. Then on Wednesday, based on an analogy between October and December last year, I turned a bit more bullish. I thought, well, the odds seem to favor we're going to go straight up. Well, that was wrong. That assessment was wrong. Credit where credit is deserved, but also saying I was wrong in that assessment. That assessment did not pan out the way I wanted to. This assessment did. Once again, Elliott wave 1, technical analysis 0. Elliott wave, I believe, is still the most powerful way to analyze and track the markets. So far, so good. So I was looking here for a drop to about 4430. Okay, 4430 was what I was looking for, and same here as well to about 4460. So let's see what we got. Okay, you can zoom in here. You can see here, this was on Friday. Okay. Let's here see if we can close this. There. So that was on Friday. Okay. So we didn't get the continued rally, and voila, we are right here in the ideal target zone. This anticipated path for the last couple of weeks has panned out reasonably well. I thought we'd get a drop, a rally, and a drop, and so far that's what we got. The rally was more pronounced. We went definitely higher than anticipated, but so far so good. Okay, this still looks good. We haven't gone below any critical levels. So this is then the question, because if we start dropping below critical levels, then we only have 3 waves up, potentially even a leading diagonal, as I showed you for the IWM. I don't like leading diagonals. It is possible. So always keep that in mind. It's not something I prefer, but it's possible. 4440, today we bottomed at 4450. So I was looking for 4440, 4460, right in the middle. So far only a 3-wave decline. Here is then the hourly chart. If we go back above the low made earlier this week, I believe that was on Friday. If we go below Friday's low, above it, then we only have 3 waves in place. So let's see what we're going to get tomorrow. Okay, we've got extremely oversold. Hasn't seen this oversold in like 4 months. It's extremely oversold. So far, it looks like ABC. Okay, the bullish cutoff here is at about 4390. I don't want to see things go below 4390. So far, we're not here. So far, we're following this general path pretty well. Lower, higher, lower, now hopefully higher. How exactly, of course, these paths are being filled in, that's the devil is in the detail. We always know that 4th waves are 3 waves, ABC. Looks like a zigzag to me with so far a almost ideal CSA relationship. Doesn't have to be that way. We go below 4390, and then we only have a leading diagonal potential. Otherwise, we only have 3 waves up. That remains on the table. Same here for the Dow Jones. This is the Dow Jones, and I haven't adjusted any of the wave labels. Remember the A, the B, the C. This is how I had it last Friday and on Wednesday. So we can now say this is then wave A, wave B exactly where it should. And let's do the Fibonacci math on wave C. Okay, so we just go to work here, and I'll show you exactly how we're going to go about. So there. And then wave C should bottom right here. Okay, I'm going to do that in blue. And that is so far what we got exactly. So is this then wave 4? We're not below the bullish cutoff. So let's have a look. Okay, there. This is where wave C of 4 should bottom. So far it did it. A little bit of overshoot. This is the ideal wave 4 target zone. But please remember the wave, if this is a wave 3, didn't reach the ideal upside target either. So we have a little bit here of discrepancy, and that discrepancy might then be added, so to say, to the downside. Okay, so to the downside. And that we got right there. So that's this different. We're lacking this, and then of course we get a little bit more to the downside. So far so good. I like it. If we can get the reversal tomorrow, then we have a picture perfect ABC pattern on our hands for this wave C of 4. Okay, ABC. Nothing out of the ordinary just yet. Now here is the NASDAQ. The NASDAQ did go deeper than I would have liked to see. Yesterday it stalled right where it should. Today it dropped below it. That's a warning sign in that we are dropping below here the 13,820 level, I believe it is. We didn't close below it, so we can still do this for 5 setup. It's still possible, okay? I don't want to see a close below it. Why not? Because it increases the odds that we have completed the impulse and we get this option. This one is still very possible as well. 1, 2, 3, 4, 5. Why? Because we've reached the ideal wave 3 target zone, ideal wave 5 target zone, right to the 200%, and now we could be correcting. This is not necessarily the case for the S&P 500 and the Dow Jones. Remember, every single index on their own. Look at how different this index is compared to the semiconductors or the small caps. Completely different, right? Here we are pretty much at the January levels, and if we go to the IWM, we're pretty much at the February-March lows. Quite the opposite. So know where the strength is and know where the weakness is, and that not every index is exactly the same. Still looks like 3 waves lower. We go and break above Friday's low, last week's low. We break back above it, then it's very hard to make this into 5 waves. Then it suggests we are on our way to complete this pattern. Same for the NASDAQ100, remains that we could have completed wave 5 of 1, option remains, or we are still completing wave 4 of 1, okay? We reached all these ideal target zones in last year. We reached them as well, but we extended or failed this year. Again, the market do not have to adhere or conform to them. It doesn't have to. But what we do know is that we got pretty close to the upside target of 200% for the NASDAQ 100, which is more often reserved for a 5th wave. So we need to also acknowledge that fact. And there are enough scribbles in place to suggest we have 5 waves completed, and we are now in this wave 2. How things eventually align, couldn't care less. They don't have to align. Things are in their own world. Treat every index on their own. We did drop too low, I would say, for this wave 4. The ideal wave 4 target zone is here. But again, it doesn't have to listen to it as long as we can move higher. So please keep that also in mind. We set those parameters to anticipate where 3, 4, and 5 should top and bottom and top respectively. It doesn't have to listen to it. It can extend, can truncate, whatever it wants to do, as long as 3 doesn't become the shortest wave, and as long as 4 and 1 don't overlap, unless in a diagonal, as I showed you here. This is not too bad for a diagonal, by the way. Then we are fine. Semiconductors are weak. Look where the semiconductors are compared to where the Dow Jones is, and where this is maybe a little harder to see, the NASDAQ is. So again, we are really in different worlds. Please keep that in mind. Don't try to force fit, oh, this is the semiconductors went below the February low, it's all doom and gloom. No, not at all. It's not a canary in the gold mine, or anything. None of it. They're all just independent indexes. If everything runs the same all the time, exactly the same, there's no point in having all these different indexes. They must all show different parts of the economy: technology sector, small cap sector, small businesses, large businesses, mega cap, all that stuff. If we don't see that, then it's pointless to have all these different indexes. So we continue to track each and every one independently. It's been a nightmare for the last 1.5 years pretty much, but it continues to be this way. Before they did run a little bit better in sync, I would say. Not anymore, so we'll have to take that the way it is. So bottom line, long story short, in italic are Wednesday's findings, in capital letters below those today's, okay? So I said the backing off that we're seeing on Wednesday would either be wave 2 or wave 4 or wave 1. I said it appears to be the latter. That is for the S&P 500 and for the Dow Jones, maybe not necessarily for technology. Remember, IWM can also be wave 4 or wave 1 for a leading diagonal. Again, 4th waves are notoriously tricky. Okay, not tricking, tricky. So the current rally can still be wave B of 4 with the retest of the lows, wave C of 4. That was correct, okay? And I got more than I bargained for, because we definitely dipped below the lows made last week on Friday. And the NASDAQ did not close below the bullish cutoff, but dropped below it. So tech can already be in wave 2 of 3. I remain bullish until proven otherwise. What is that? Below the February lows or the March lows. That's it. That's the simplest cutoff of all cutoffs. Remember, all indexes have been out of sync for a lot in recent months, if not year plus, and may continue to do so. And going forward, see the semiconductors and IWM. So the S&P 500 should break over 4410. I believe that's Friday's low. Then it really suggests wave 4 is in. And if we get above this week's high, Tuesday's high, it really confirms wave 5. Sorry for the wrong colors. I picked the wrong colors. It's okay. Even the colorblind as me can see that's not agree. However, I said on Wednesday, when I compare it with the October-December rally, it suggests we go straight up to new uptrend highs. Wrong. I was wrong on that one. I apologize. Again, I can't get everything right, but I also criticize myself and I'm honest about it to remain objective. That was wrong. Sorry about that. That's pretty much a chapter of past performance is no guarantee for future results. Semiconductors are in trouble due to a rather deep retracement so far. They should not drop any lower, or I need to adjust the wave count. Okay. If wave one of the semiconductors is in and it was a leading diagonal, then the current drop fits, meaning after a leading diagonal, expect quite a steep retrace. This also means wave three is going to extend, if that's the case. If we drop below the March lows, then I adjust accordingly. Anticipate, monitor, adjust. It's all we can do. I need more price data to elucidate the IWN chart. That needs to be updated. Give me 1 second. That's what I wrote. Let's see here. Where is it? Here. There could be a leading diagonal with wave 4 of wave 1 complete. Should not drop any lower. Okay. And last but not least, you see, I have not mentioned any of the Federal Reserve's statements or whatever you may have. The market beats to his own drum and will do what it will have to do. I know the Federal Reserve is going to tighten in the next couple of weeks and all that stuff, or a couple of months. That was kind of expected, wasn't it? We already knew that was coming. Nobody would say that we're not going to tighten. So tighten the quantitative easing. With $9 trillion of debt on the books, it's about time to start writing it all off, I guess. Anyway, so this is what we're seeing. The semiconductors are in a pickle and need to start moving back up. IWM as well. S&P 500 Dow Jones still looks really good for this wave 4. We should not drop much lower. I do not want to see this go below 43.90. Okay, so I'm going to add that below 43.90. Suggest something else. 3 wave rally. Okay, so that is still on the table. We are not going to change that opinion until the market tells us otherwise. So let's see if we can get the rally for this wave 5. It would be fantastic. It would make my life so much easier. Short term, intermediate term to long term. Definitely the IWM is not making my life any easier at the moment. Semiconductors neither. NASDAQ technology, we can already have completed wave 1. So all those things are on the table. Nothing has changed. We got the to be or not to be. That was a to be. Unfortunately, my assessment was wrong comparing the current rally to that of October, November. There you have it. Past performance, no guarantee for future results. So if we can get above 44.10 and the S&P 500, it starts to really suggest wave 4 is in, because we start to see overlap. Then it was only an ABC lower. Otherwise, so far, right in the ideal target zones, as I mentioned, for this wave 4, we're following the general pattern I laid out since February 20th reasonably well. The devil is, of course, in the details, but now we need to see follow through to the upside. Close today's gap will pretty much be a nice indication that wave 4 is complete. Go back above this week's high. Wave 5 is underway. We have the upside targets on the charts where that ideally should top. So nothing really too surprising, so to say. With that, thank you so much for listening. Take care, trade safe. If you still have any questions, contact me. See you on Friday.